Sovereign wealth funds, spearheading growth and stability amid global challenges. Sovereign wealth funds and central banks, the titans of global finance, are increasingly steering towards innovative strategies to build robust portfolios and safeguard stability. They are deftly navigating the uncharted waters of the new macro environment, driven by a post-COVID-19 world and the urgency of climate change. The Invesco Global Sovereign Asset Management Study 2023 provides an incisive perspective into the strategies and trends shaping these critical institutions' investment trajectories. Evolving macro environment, a call to action. The global economy continues to reel from the aftermath of the COVID-19 pandemic. During these tumultuous times, SWFs have become pillars of stability, charting new paths for investment and growth. They are diversifying their portfolios to mitigate risks and capitalize on unfolding opportunities, driven by unprecedented changes in social, economic, and political arenas. The pandemic has accelerated digital transformation, reshaping consumer behavior and business operations. As a result, SWFs are venturing into technology-driven sectors, such as digital infrastructure, e-commerce, and biotechnology, which offer promising growth prospects. Despite the risks associated with these nascent industries, their high return potential is enticing for SWFs seeking to bolster their portfolios. Private assets, the new frontier. The allure of private assets has intensified among SWFs. While public markets continue to be critical for portfolio diversification, private assets offer a unique blend of high returns and low correlation with traditional asset classes. As per the Invesco study, SWFs are discovering value in private assets across various sectors and geographical regions. Real estate, infrastructure, and private equity constitute significant portions of many SWFs' portfolios. For instance, real estate, despite facing challenges in the office and retail sectors, remains appealing due to its stable cash flows and inflation hedging characteristics. SWFs are shifting their focus towards industrials, healthcare, and data centers, which are deemed more attractive amid the pandemic's repercussions and reshoring trends. Infrastructure investment, particularly in renewable energy and private equity funds, are other areas of interest. With the world prioritizing the shift towards green energy, SWFs are channeling capital towards renewable energy projects, marking a critical contribution to the energy transition. Private equity, though riskier, promises substantial returns, making it a focal point in SWFs' investment strategies. Financing the energy transition. The energy transition is a global priority and a formidable challenge. Climate change has catapulted environmental, social, and governance (ESG) issues to the forefront of investment considerations. As per the Invesco study, over 2/3 of investors believe that SWFs can make a significant contribution to financing the energy transition. This emerging focus on sustainable investment is evident in the growing adoption of ESG policies among SWFs. The study marks the sixth and largest annual rise in the proportion of these funds implementing ESG policies, rising from 46% in 2017 to 79% in 2023. Investors recognize that climate change implications and the financial cost of the energy transition represent significant risks to global growth. To address these, SWFs are committed to channeling their resources towards renewable energy projects and other green initiatives. Notably, these funds are acting as catalysts, sparking increased participation from private investors and facilitating the global shift towards a low-carbon economy. Emerging markets and the role of India. Emerging markets are experiencing a renaissance as attractive investment destinations. With the normalization of interest rates, SWFs are eyeing these markets as viable sources of diversification and higher returns. Emerging Asia, Latin America, and Africa have shown resilience despite escalating interest rates, signifying improved institutional strength and promising investment potential. India, in particular, is emerging as a dominant player. Its favorable business and political stability, desirable demographics, progressive regulatory measures, and welcoming environment for sovereign investors make it an attractive destination. The trend of friend-shoring and near-shoring benefits countries like India, wherein foreign corporate investment supports both domestic and international demand, consequently bolstering local currencies and assets. Central banks, ensuring stability amid currency challenges. Currency-related issues present a significant threat to the stability of central banks. To navigate these challenges, central banks are adopting innovative strategies, such as diversification into emerging market currencies, to hedge against volatility. The sentiment towards broader emerging market allocations shifted dramatically over 2022, with 54% of central banks holding non-renminbi emerging market allocations in 2023, up from 47% in 2022. This increasing diversification highlights the strategic importance of emerging markets in the global financial system. Conclusion: SWFs and central banks play a pivotal role in driving growth, ensuring stability, and financing the energy transition in an evolving global economy. The Invesco Global Sovereign Asset Management Study 2023 provides valuable insights into these entities' strategies in the new macro environment. As the world continues to grapple with the aftermath of the COVID-19 pandemic and the impending climate crisis, the insights from this study will prove invaluable for policymakers, investors, and other stakeholders in the global financial system.